So here it is. Rich Chinese snapping up luxury homes from Singapore to Sydney. This is from 2 days ago, so this is a big deal. Mainland Chinese property investors have retreated from Hong Kong. So rich Chinese investors are finding luxury real estate is a good hiding place from the economic fallout of COVID. Across China and in some of their familiar hunting grounds in Asia, wealthy buyers are snapping up top-end housing, in many cases to guard their wealth against anticipated inflation and weakening yuan. The rush to add real estate has led a jump in upmarket housing prices in China, while offering some support for Asian property markets to hit hard by the pandemic. So, since March, 2 has sold 85 million of prime property, with about half of the sales to Chinese clients who were in Australia when the pandemic hit. That's 25% jump from earlier in the year. The homes priced between 7.25 million and 19.5 million are all Sydney's well-heeled oceanfront suburbs, such as Point Piper. So guys, there it is, man. It's happening again. Chinese inquiries for South Korean property increased by 180% in the first quarter. So South Korea is getting hit hard with foreign investing, and this is very dangerous, because this is what actually dismantles the country and keeps the locals out of their own markets, right? You see what happened in Australia and Canada, right? So Chinese buyer inquiry 180% for the first quarter compared with the fourth quarter of 2019, while inquiries in New Zealand homes have jumped 75% according to the data from Jiawai. Real estate firm searches dropped 32% in the UK and 18% in the US. High-end demand is bolstering prices in China and tempering declines in other markets. Price for top-end homes in 4 of the biggest Chinese rose 1% in April, led by the biggest jump in 2 years in the tech hub of Shenzhen. Even in Singapore, where a partial lockdown remains in place, activities picking up via online platform. 3 Chinese clients bought 6 apartments worth combined, 6 entire apartments, combined 20 million at Marina One residence this month without any virtual tours, said Clarence Fu, a property agent in APRC. I'm going to see if I have this thing saved here, because I think I'm going to read this article for you guys on a single show, because it looks like I have it copied on my desktop already, because this is a big deal. See, Hong Kong used to be a favored destination due to its proximity to mainland China and fewer market restrictions, but the pro-democracy protests have prompted many rich Chinese to turn to Singapore as an alternative. Undeterred by the higher taxes, Hong Kong luxury home prices dropped 4.5% in the first quarter. So they're going to be looking at the Canadian Prime Minister is trying to be on Hong Kong's side. Hey, what's going on? Are you guys okay? I don't know why he went against communist China. That was just a weird thing that happened. Australian housing isn't the one-way road to riches as it was. So it looks like with the effects on COVID shutdowns reverberating through the economy and the nation set for the worst recession in 90 years, the concept that owning a property is a license to print money is under threat. So there it is. Commonwealth Bank of Australia, the nation's largest home lender, estimates that under a short, sharp economic downturn this year, followed by a quick recovery next year, house prices will fall 11% by March 2023. The worst case scenario of a prolonged recession, prices could plunge 32%. So they're actually calling a spade there. So again, rich Chinese snapping up luxury homes across Asia. A lot of them buying entire towers without even going to them.